Nobody is expecting anything large. There are two things which in a sense are quite puzzling. TCS is at a record high, and it may have slipped slightly after that block deal which happened by Tata Sons. But in general, TCS has done rather well for itself. Let's look at the year chart. It is in line with what Nifty has done this year, and last 1 year TCS has given you a 25% return, which is almost magical considering that IT has got a serious headwind right now. Second, valuations for the entire sector are not very cheap. So the sector may be going through what could be called as lower than historical average growth rate, but valuations are not at a 5-year low or a 10-year low. So why is that? Markets are bearish, everybody likes IT, but IT is still doing okay. TCS has done okay. Sandeep Agrawal, fund manager with Value Investment Manager, joins us now. Let's take our conversation forward. Good morning. Thank you for joining us. Looks like you're in a car, or is that a Zoom background?
No, thank you for having me on the show. And yes, I'm in a car. I'm traveling to one of the industry hubs in Gujarat. So again, a lot of action happening in the industrial belts of Gujarat right now. Super economic activity pickup. You can see capex everywhere. So I was traveling just to feel. So yeah.
Good. I'm glad you could join us. I'm glad you could join us. Marvels of technology. We can hear you. We can see you. Doesn't feel like you are actually in a car. My question is that why is the sector, or why is IT sector at a time when there are very little tailwinds and a lot of headwinds, is still trading above its 5-year average, and stocks like TCS have actually done exactly what Nifty has done in the last 1 year. If the news is bad, if the business is not growing, why is IT still holding on, and why are stocks like TCS performing?
So Nikunj, it is an absolute very good question, and I can tell you something. I have always been little contrarian in that sense, but I can one data point. You go and see in history last 30-35 years, whenever the front runners of the tech have done well, we have done extremely well after 6 to 12 months lag. And despite all the concerns of hard landing in US and recession and everything, Nasdaq is almost close to new high, and you will be surprised to know a large cap company like Microsoft is up 7% in just 1 year, and some of the other names like Meta and all have done even better than that. We are bound to do well now. Whether it will be after 3 months or 6 months is someone's call. I think we definitely have made bottom in for the large cap in last 3-4 months, and from here on you will see a lot of return in the large caps. Now, what I mean by lot of return is between 15 to 25%, which I think is a great return. So I think because the dependency of these large companies in the US is very high now compared to earlier on Indian IT companies, because for sourcing they have to come here. So it is just a matter of time, and I can tell you with a lot of confidence that you will be positively surprised by the numbers this quarter versus what analysts are expecting, in my view. Maybe one except barring 1 or 2 companies which can have some challenges, but broadly the budgets, the wins will surprise you positively.
What has changed between Jan and now? Because when we spoke to the same managements, in Jan they were sounding okay, theek hai, we don't know, yes we are bullish, but near term hard to fathom, orders are coming, but that is not getting translated into real, real business per se. Similarly, if I look Accenture numbers also, they do not inspire too much of confidence. It's almost like a canary in a coal mine, what is happening to the IT sector. You have a contrast, so I'm curious why.
So see, this is a B2B business. 25-30 clients make all the changes for any company. So they speak what they see. So this year, I think we should compare strictly with January 21 and March 21. In January 21, everyone was cutting guidance, and in March 21, everyone started upgrading guidance. So this year, I think I will compare with 2021. People were very negative in the month of January because they were seeing a lot of impact of COVID and all that. And suddenly in March, they realized that, oh, we need technology to even survive in COVID. So I think we are in the same phase now. In Jan and Feb, people were skeptical. I think in March, and as we go forward in April and May, you will see the commentary changing dramatically. So the numbers will be of March, the commentary will be more of May. So I would say that maybe on numbers, you may not see big surprise, or it will be slightly above estimate or in line with estimate, but the commentary will be much better than that. Because now, things are opening in a big way. You see data which has come from ISG also. it says that, there is a underlying current which has started to flow in. So I think the commentary will be very positive.
What about valuations? Okay, let's assume that commentary will be positive. They will come out and say that worst is behind us. But can I argue back and say, and I'm again devil's advocate here, I'm purposely taking a different stand than what you are taking. From a market standpoint, the fact that these stocks are still trading at a premium to their 5-year averages, does that mean that the upside, even with positive commentary, is going to be limited?
Yes, you're absolutely right, because, for example, in the mid cap space, if you see, the valuations are really, really rich. And from here, valuation re-rating won't happen. Whatever you grow or whatever you are able to surprise on the earnings, that is what you will get. But in the large cap like TCS, Infosys, HCL, Techem, I think, there is a valuation re-rating scope also by 5-10%, and there is a earnings surprise delta which will also come. Remember, in large cap IT, generally what happens, they will have 3-4 years where they will give 8-10% return, and then there will be 1 year where they will give 30-35% return. So average you will make 12-13% over a long period of time. I think this year is again the year where you will make outside return of 20-25% or maybe 30% in the large names. And then again, as you rightly said, that valuations being rich, they will again give normal returns in the next 2-3 years. So that is the way I look at it. I think, Nasdaq, the way Nasdaq has performed, the components of Nasdaq have performed, those the flow of those growth will come to Indian IT in next 3 to 6 months. When that starts coming in, analyst estimates will get revised upward for at least 2-3 quarters, and that will drive both the re-rating and the stock returns. That is the way I look at it.
Okay, Sandeep, always good to have you on the show and sharing your thoughts. IT, all eyes on this one, with TCS coming out with its numbers today.
If you like this video, then like, share and subscribe to ET Now.